Good morning and welcome, everyone. It is Monday, April 11th. I got the date right today. I double checked that. Apologies for any confusion on Friday if you were all a day off going into the weekend. Got Brian Caprice again to kick us off on Monday morning and take a look at all the market moves. Todd Rich is still out, so you're stuck with me for the remainder of the week. I've got some moves in yen that we'll be taking a look at, and the comments out of the bank and why that's really taking place today. CPI obviously coming out this week. We'll talk more about that. Got some moves as well in the commodities such as oil. Before we kick it off, though, remember, trading involves risk. It is not appropriate for everyone. It's not appropriate for everyone at each stage of their life. Always make sure you're using risk capital, not anything earmarked for grocery money or gas or mortgage. Surest way to lose all of it. It has to be true risk capital. We're going to be talking about the markets today, looking at some interesting levels. Please keep in mind this is for educational purposes only and is not meant to be a trade recommendation. So with that, let's hop right in, Brian, and I'll slide the screen.
Yeah, I'm not hopping too much. Long weekend, 5 lacrosse games, and I had to play. It was rough. It was a lot of fun. And on the way home, I was like, I'm going to pay for this over 2 days.
I mean,
But of course, I get allergies at the same time, so like I can't. I'm like, is that a keyboard? Is that a keyboard? Can't see anything. Just so everybody knows, Todd is not when Dan says Todd is out. Todd's on vacation. Todd's not like sick or anything. So I was just like, wow, you making it seem like Todd's like with sickness. No, Todd's on vacation, guys.
I haven't caught up with him in a few days, but I hope he's not sick. So
yeah, he flew to California, so I mean, who knows?
Yeah, I'm going to guess it's been a little bit nicer there than what it's been throughout most of the rest of the country.
Yeah, I had a frost warning when I logged onto my computer today. I was like, frost warning? What are you talking about? But yeah, it was cold. It got really, really cold this weekend. It was freezing, and then yesterday with the wind and everything. And
oh yeah,
I have
we on
voices. If it makes it through this, I'll be lucky.
Yeah, it's Saturday morning walking the dogs, and there was snow on the roofs of the cars and frost on the windshields. And then yesterday it was mid 60s. So I guess it's that time of year.
I'm assuming it'll be 75 later by Thursday, and then we're supposed to have like snow flares on Friday. So yeah, that's Mother Nature. So going to the markets today, guys, really nothing is moving minus the yen today. You can see the euro dollar down 11, pound dollar 9, dollar Swiss 10, dollar CAD's up a little bit, 39. And that's basically because of oil. Oil is continuing to deteriorate over the weekend. Aussie dollar totally flat, euro pound 4. The two biggies you see is the dollar yen at 155 and the pound yen at 205. Now, and again, this is why it's so important to understand when the bank presidents are speaking. We've heard a lot over the last week, 2 weeks about, the yen is weak. There was comments like, hey, listen, it doesn't hurt us until it hits 130. Then we saw a whole bunch of yen strength coming back in again. And this is why monetary policy notes, minutes, reports are also important. A lot of people will always say, oh, there's no way to predict these. It's like, no, you can't predict what's going to happen. But with typically a high degree of success, you can figure out when the catalyst is being introduced. Again, central bank figures talking. Again, you look at those economic news release calendars, you can find these things out. But the comments coming from Japan were basically, we're going to maintain an ultra loose policy, to stably achieve 2% inflation. Remember they said that, it being weak actually helps us out. This is all this quantitative easing. This, keeping rates super, super low. Inflationary pressure will likely heighten, as a trend. We're trying to go up. It's moving slowly. We're trying to accelerate the pace. Like everything we're trying to avoid right now, they basically said they're trying to make it happen in China, in Japan. So, it is kind of an interesting, like, right now, Japan and China actually are more in this kind of creating more loose policy for where they are kind of in the recovery versus other nations. So it is a little bit different of a story, but because of it, obviously, we're seeing, it doesn't matter which one. I mean, here's the Aussie yen. You're seeing big movement. From where we were this last weekend, from last week, we had a nice little gap down into a level of basing and really just went straight up. So there will be profit taking coming in, but remember, this is monetary policy, so it's not just a data figure. But what's interesting now is from where we are at this high, could this be the high right now? It could be. With the U.S. session coming online, there'll be profit taking coming in. We'll see some yen strength coming in as the indices are opening up. What's interesting about it now, I don't know if you can see this, if we take it from like the old previous low that we hit on the 31st of March to where we are right now, we had marked off last week this level at 123.50. And again, it chopped through a few times. That's why we were looking for a short and then kind of taking over this racetrack. looks like it's really, really far away, but this could be something that's like a Wednesday-based trade or a Tuesday-based trade, or, again, all that data is into the market. If you're looking for like a week-long position or something with a larger duration, again, if you could find one of the products up here, maybe like one of the knockouts, there could be something to take this short back down again. But I think this 123.50 is an important figure because we already know we got a racetrack below. When it does kind of kick back again, it's now the 50% level, so it's going to show up in a lot of automated trading algorithms. It's a very, very easy one for new fib traders to look at. So it is more of an if this then that based trade. But again, big Monday if you're looking for something more on a weekly basis. I mean, at this point, what other news can they say besides what he just said that we're gonna, the head guy saying we're gonna remain ultra loose until we're able to achieve this target. The market's really banked it all in. Everybody that wakes up and sees that says, "Oh my God, I need to short the yen." So I'd say right now it's more of in kind of a reversion to the mean type, kind of possibility. Pound yen, same thing. We had talked about kind of the bouncing back and forth, and it did. Look, bounce, 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 and then also those comments came out and it shot higher. Is there any real reason for the UK to be weak? Really, not so much, right? Not that there's a lot of weak dollar, but you will see some profit taking coming back in to kind of take advantage of this. And then obviously Aussie, you're seeing Aussie last week. We had marked off that 50 at the 93.24, and same thing. It kind of came up and it respected that level, pushed back down again and fought. I needed more buyers, more buyers, more buyers, and finally broke through and came up. So again, Aussie is there as well. I would say that in this situation, unlike the other two, where it's definitely more of a short feeling, with everything that's going on, and there was actually some data, the PPI and CPI out of China, not great. So it actually kind of hurt the Aussie a little bit. So this one was kind of a two play. I would say this one probably has the ability to go a little bit higher if you still want to kind of continue to trade this. Probably about, I don't know, probably about another 60 pips higher before we run into those old sellers. That kind of full retracement is probably what I'm looking for. And again, I want to see what the open looks like. But as far as Harry Potters go, again, we had a level, we fought. We finally broke through the level. We based above it and pulled back. Kind of see if we don't go any lower here, this could be the confirmation entry. We may want to go a bit higher. And again, may say, well, why would we do that? Well, gold is also up pretty big, right? Reason why gold is up is because you have a central bank figure saying, oh, this is ultra loose policy. Well, it's already factored into the market now. Okay, we should see some profit taking occur. And again, we know in the United States we're going to raise the crush inflation. So on a worldly spectrum, trying to increase inflation in Japan, yes, that will obviously make gold and silver rally. But now that we're in the U.S. session, the U.S. market has a lot more global control. What they do, the comments that they make, I really feel like we're going to start getting the more aggressive comments now. Because last week it was kind of like, is that good? Is that bad? I don't know what they just said. I think we'll start getting the more aggressive comments. So once this top is formed, again, as gold goes down, the Aussie should weaken, which also happens the Aussie yen over here. In this case, going higher. So actually, it would come to the downside. But like I said, with this bounce in here, the U.S. trader hasn't come in yet. So that's the original part that I was getting at. With it pulling back right now, again, I do think gold is a short, but I think we'll have an immediate response of kind of the comments about it from the U.S. trader. So again, look for it kind of more in the near term. Oil is something else that we have to talk about. Oil is now down at kind of the bottom level that we talked about last week. We talked about this level down here around 93.90-ish level. It's kind of pushed through. This is kind of a big move. Not a lot of headlines. The only thing we've heard, obviously, Russia has kind of gotten a new general now. They've moved things around. I think people are starting to get Ukraine fatigue, if that makes any sense. All the data that we saw was not really great. But with it continuing to drop down again, we knew we had a lot of extra supply last week, as well as the strategic oil reserve stuff coming in. So, looking on the oil front, there's not really tons out there. It's not one of those things. It's like, is this the pullback before we start to rally higher? And it may be. I like to see, kind of what we do at the open. See if there's any type of a pullback, an initial push with a pullback. If this was the bottom, I wouldn't actually be surprised. The Europeans have sent it straight down again. So, again, talking about a week-long position, I'll tell you right now, if this is not kind of the bottom, or if we don't get it sometime today, if this continues to deteriorate down and comes back into the 90 range, I'll tell you right now, OPEC Plus is going to do absolutely nothing to increase supply. And everybody else, and the big question is, well, okay, with it down at 90, is that making much better for us? One of those things. Right now we currently have an interesting scenario where a lot of governors have done those tax holidays on fuel like gas, right? I know Maryland, when it went in, they pulled it off. It was 50 cents. They got pulled off again. So again, people like the 355-ish gas. When that tax holiday disappears, it's going to go right back above $4. Question is, what will that shock do when people all of a sudden be like, oh my God, we got to ration gas again? And will that be the big catalyst? So interesting things in play, as well as food costs are starting to get really, really crazy. There was all the food shortages. Now we're getting the fuel factoring into it as well. Um, you know, I know my wife this weekend with the Sam's Club, and she's like, they're sold out of the things that I need already. And we tried to get my son's birthday cakes, and they only had one style of birthday cake there. They're like, we don't have anything else. We can't get the ingredients in right now. So if Sam's Club, who is associated with, I think Walmart's their big guy.
Yep.
Uh, if Walmart itself can't even get ingredients for making cakes, what does that kind of tell you about the supply chain situation as far as food products? So interesting scenario.
It is, and this is somewhat anecdotal. However, with CPI coming up tomorrow, obviously everybody's talking about inflation. We're talking about gas and food. I think really where it hit me, online grocery delivery services. I have a cart set up. It has 31 items. I always get alerts if something goes on sale or a price change. It really hit home. Looking from, I think the last time I ordered was a week and a half or so ago. I had 31 items in my cart. 20 of those all increased in price by it was a little over 15%. So
yeah,
pretty substantial, particularly
across
when you look at families.
Yeah.
When you look at what families have to buy, and mentioning the out of stock items. I mean, simple things like red peppers, and we're starting to see it more and more. I'm seeing a lot more out of stock items that they just can't deliver.
Yeah.
Unfortunately, and it's sad if you can only get one type of birthday cake. Talk about a celebration.
Yeah, and it was like, my kids don't like coconut, but yeah, it was like a coconut shave something else, and they're like, nobody buys it. So, but just odd. And again, it's something that we know that inflation is bad, and with them not giving any true direction, it makes sense why gold is popping and silver is popping. So that's why I feel like they have to do something about it. We knew that there was going to be a chain of events that happened, and they're saying that the increased fuel costs have not even started. They're just starting now to get rolled in. So again, if we're seeing supply chain issues already, and now we're getting the fuel cost in there as well, that's going to be a lot more food inflation. It's going to become even a hotter target. So I think it's definitely something we got to keep our ears to the ground and watch out for. I want to get closed on this at this point. Big jump in the VIX, and again, we always see this kind of jump over the weekend. Question is, are we going to take this as kind of a topping in the VIX right now? There was different headlines in here, and again, talking about how two other countries, who is it? Finland and Sweden, both joining NATO, and Russia's like, yeah, you can keep adding more people to the alliance. It's not going to create more stability. It's going to make this is why we went to war now, is because we don't want the expansion of NATO. It kind of makes sense. I understand it from both sides. Again, I thought that they were actually already in, so I was kind of surprised that they weren't. But just one of those things. But the only other news we really got was the new Russian general, who was also the general that led Syria, was completely fine hitting train yards, civilians, all that kind of stuff. So not necessarily the guy that you want to hear getting promoted, got promoted. But besides that, there's not really many more headlines from it. But I think it's really the unknowing. That's what has driven us up right now. And because of it, all the indices are firmly in the red. And with inflation, again, creeping higher in no true direction, it made sense why we rallied up again. But again, when we start talking about food shortages and tax gas credits and stuff like that, I think overall you really kind of need to look at this and be like, hey, listen, is this going to be more of a red week this week? Because they have to do something to control inflation. It's getting out of control. 40-year highs, and they've seemingly done the bare minimum of what they needed to do. And you have the experts that saying it's going to be transitory. That we will probably peak in the next little time frame, and then it'll start going down by the end of the year, and then the Fed looks like a genius. But the reality is we're at 40-year highs right now, and it is an election year. And Yellen said it's going to last all year. So if she's right, we have another year of increasing inflation, and we haven't even seen the fuel kick in, and we haven't even seen the food shortages kick in yet. So doesn't look really fun. So I think they need to do something. So again, indices overall, they've all pulled back to an interesting spot, though. I just did want to point this out. The 44.46 level from last week, that's where kind of we were using as our targets for all of our shorts. And you can see it's really kind of sitting down there. So the fact that it has been so negative and all of them are red, there will be a retail trader mindset that I need to short at the open. They're going to look at this level and say, hey, listen, if it drops below 44.46, I need to short. That's my Globex low. It tends to be where traps are, and we know that we have buyers in here. Now, it's not fresh, but just giving you guys kind of the heads up. If it does take a rally off the open, wouldn't surprise me, because we've had buyers here in the past, and people will see this and be like, oh, all red. We got a short today. So, even if my sentiment is I'm going to be bearish all week, there are still buying opportunities in there. You can buy and trade the pullbacks. NQ is kind of the same. Now, we did have a Harry Potter. We were talking about a break of 14,484. As you guys know, I typically don't carry these over for the weekend because I want to see I need it to reset. But where we are right now, if we do have kind of an opening rally, it has pushed back in and has given us decent base and is holding below. If we pull back up in the next 30 minutes, we're kind of sitting there. And I adjust it just a little bit. I may adjust it really even up into this level here. I think that same short exists, and we have the ability to go back down to 14,000. We're at 14,163 now. If we drop down to 14,000, that's a simple jump. That could literally, we could move that far down by 10:30 and then recover and still end up in a green for the day. It's not that big of a movement. And again, firmly down. I don't care what analysis you're using. You can take this and just draw trend lines and be like, look, there's our top of our channel, and I'll do it from here, right? There's your bottom of the channel, and you can see it's firmly to the downside. So, a lot of basic systems out there will be telling you to short it. It's basically even at Global X lows right now, it's kind of set there. And again, we knew we had buyers for a while, but now those buyers are kind of gone. And the question is, will they be, is the old going to be new in this case? So it's pretty close. And that one's down the most. YM 34,500 is really big right now. You can see again, we had that one marked off as a dotted line because it is a large psychological number. Again, last week we talked about the big pop down, the parabolic retracement all the way back again, and now we're kind of stabilizing. But at the same time, you can see there is channeling sideways in here. We're kind of pulling back up. I wouldn't say there's much of a fib target or anything on this. The 0.35, this is technically the strongest right now, but even with it rallying right now, I don't really have a great level of selling until really up here. So, could we take an initial pop? Sure, we could. But I would say look for that as a potential top here. At 34,586. But right now it's kind of wedged in. Like I said, if it gets negative off the open, the level that people are going to be looking for is going to be right here. That's going to be your Globex lows. Is going to be 34,412. You'll see a lot of experts are like, oh, if it goes below this, you got to get short. And yeah, but understand there's buyers sitting right below it. So just be cautious. You don't want to go short here for it to run into these buyers that have proven themselves right here with this large explosion. Just to get stopped out, they have it come back lower. So watch YM. And then Russell's got to consolidate. Obviously, it's a very easy kind of top right here. There's a little bit of a gap. We hit it in the overnight. Again, right at that 7 o'clock period. And really at the 4 o'clock. It was 4 o'clock, 7 o'clock. Question is, are we going to break through this bottom side here as well? So it's going to kind of bracket it in. So it's an interesting Monday. Like I said, not a lot of movement. Indices are all in an interesting spot. They're all deeply in the red right now. None of them are like close to turning and flipping. But could they turn green very fast? I think so, with where they're based off of. A lot of it will be kind of a Monday morning trap. And then as Dan said, with CPI tomorrow morning, again, it was great to see CPI not as bad, but the lack of doing anything, the forecast is that the month-over-month consumer price index is going up 1.2% from where it was before. We really wanted this to get lower, not higher. This is we're going back to the same thing. So, and then again, understand tomorrow night too, not that we traded at Nadex, but again, New Zealand is also taking another stab. They're going up to 1.25. So we talked about how 1 is a magical number, particularly for the carry trade. Looks like right now, I mean, the U.S., depending on what we raise next time, the U.K., depending on what we raise, they may take over. But right now, it looks like the carry trade will be coming back online with the New Zealand yen. So that's pretty interesting. You don't see that one be typically the carry choice, but right now, that's the opportunity, especially with the yen's comments, to make the most money right now in the currency market with using the carry trade. So some interesting stuff. And then Bernard speaking tomorrow as well. Yeah, with Bernard speaking too, we always talk about risk going in, and I know we're a little bit late today. You're seeing the cryptos are down pretty big. Cryptos are down 2%. They're right around 41,000 on Bitcoin. Ethereum's down 4.5%. Dogecoin is down 4.7%. And even bonds right now kind of closing to the downside. So it's one of those things. It's a lot of risk off. And looking at it, it's kind of like, well, is gold the stability trade right now? It looks like gold is the stability trade right now. So I'm sure there'll be some headlines today. But again, 15-minute charts, watch your setups in the morning. Again, look for 10:30 reversals today. I think today is a prime candidate for that. And again, being Monday, look for your week-long trades. Use your knockouts to find some week-long trades for today.
Absolutely. Thank you, Brian. And really appreciate it. Like you said, there's a ton of uncertainty out there, a lot of developing stories, a lot of narratives, depending on what you're trading. So biggest part, always understand trading involves risk. This was for educational purposes only. I can't stress it enough, not just because this is disclosure time, but your main job as a trader is to manage your risk. I think it was Amos Hofstadter who said, take care of your losses and the profits take care of themselves. So with that, we'll wrap it up and we'll catch you tomorrow morning after the CPI. Have a good day, guys.